the market could try to attract more people with blue chips with a possible swing like that, saying, what's the point of buying Amazon? Let's say it's 28.75, and for years it's going to take maybe 10% in a year. What's the point of that when and everyone's looking at, let's say, Facebook, which is 322, and you're struggling to get it to 328, and then it's down to 320. So whoever is holding the stock is not really making money. If it moves 15%, like 007 was saying, 20%, now that becomes interesting for holding shares. We're not talking about penny stock. We're talking about blue chips, stock that have a proven past. I'm just throwing this out. Could that be possible, or am I just delusioning? And this is Friday, and I should close everything and have a beer on my own.
Yeah, I don't know. I say have the beer. That's my answer.
I mean, are they trying to attract us with volatility? This is the question I'm asking. Because it becomes more volatile, it's not as boring as before. Possibilities are higher, and I'm just thinking out loud here. Could this be a possibility, or am I just daydreaming?
Well, if we're gonna entertain, we're gonna talk about crazy theories, let me bring this to you. What if, what if the reason we're so volatile is because liquidity has been taken away, and the opposite of your theory, liquidity has been taken away, and big players, hedge funds, market makers, and things like that are too afraid to step in as they usually would, because they've foreseen something else.
So the movement we see is only created by retailers, smaller people.
Yeah, I mean, not necessarily created, but let's say, for example, Facebook, what was it trading at the other day?
320 kind of thing.
320, right? And it broke through multiple supports, right? Broke through multiple supports and come into 225s or 228s or whatever. And the only reason they can go that far is because there isn't liquidity to, and when I say liquidity, I don't just mean buying and selling, or just selling. I mean people stepping in to buy at certain areas, right, to ensure it doesn't free fall. So I mean, that's the duty of these market makers at the stock exchange, the specialists and things like that. The actual people that are working as market makers, that's their duty, to prevent the stocks from free falling, because if stocks free fall, we would have a market collapse. So if we're getting these kind of action now, does that mean these guys all got COVID? Are they sick? They're just not working? What happened there?
What if Tom from MySpace was the top shareholder for Facebook?
Oh man!
I think their earnings conference calls would go a lot better.
But before we start this meeting, let's listen to this new pod, the soundtrack that I just launched.
Yeah. Good old Tom from MySpace. He was everybody's friend, though.
He forced to be your friend.
Forced friends.
You wanted a Facebook friend? You have a forced friend. But I got a jet, guys. It was good being on this podcast, and I hope you guys all have a wonderful and safe weekend.
Thanks for joining us. Congrats on your Amazon calls.
Thanks, Chief.
Yeah, this was great. Excellent move, brother.
Mm-hmm.
Thank you, guys. You guys have a good one.
You too, man. All right, Guru, any parting words for our loyal listeners today?
Well, winter is back here. We had 2 days of like I mentioned, I think yesterday it was close to zero. It was beautiful. It felt like we were in Virginia Beach for once. And now it's back to real winter. So that's going to be me taking my shovel. Did you keep the shovel you were provided, JTW, or is that
Yeah,
long gone? All right.
I still have it. I used it twice, and now it's almost 70 degrees today. So, like I said, mid Atlantic coast weather, man. It's if you don't like the weather today, just wait for tomorrow.
That's beautiful. No, what I'm about to say, I remember Amy saying that usually the Bears don't really want to scare off the Bulls on Friday. So basically, we had a shaky morning, and then it started picking up with a beautiful Amazon taking everyone by the hand to the upside. It basically bridged the gap to the upside and then some a little bit, to what we had not pre-market, after hours yesterday, where we reached the in the 452s. However, we're closing way below that. So this is not, in my opinion, this is not a very good indication about a relief, and now we're moving to the upside. I think it's just screaming about being cautious on next week again. 007 was nice to remind us that XOM is having a dividend next week. So all these energy tickers that have been very strong lately may take a pullback over the next week. So all this combined, I'm just questioning on how we're going to do for next week. So I think being cautious over the weekend, we can look at plays, but keep in mind that we could be heading down again for more downside, for consolidation, or at least some sort of catalyst that will remind us that market is designed to go up afterwards. After all, right?
Yeah, for sure. Yeah, it's it's like I said, man, we're so all over the place. This is definitely, if we're going to talk about sort of the market, being on easy mode at some points, this is probably the furthest thing that, we'll see from easy mode. This is more like expert mode. But that being said, that doesn't mean there are opportunities. You just have to be smart and definitely, I think, a little bit more conservative about your position sizing. Just stick with those small wins and grind and build that account little by little until we do, reestablish some kind of a trend or a channel that shows us, where we can expect the market to bounce and where we can expect it to reject. I mean, that's when, you really start going back to your regular position sizing and back to risk on. But I'm with you. We keep seeing these flashes of bullishness, but I don't think we're done with. I don't think we've printed the low that we're going to see this year on SPY yet. I hope I'm wrong to some extent, but at the same time, I hope I'm right because it's going to present a really good buying opportunity.
I believe Amy was mentioning something about March. I think there is a. Well, if she stepped in, she could probably mention exactly what she said. But somewhere around March, regarding a possible low for the market. I think it was from a European computer or projection. But if that's the case, we're still not out of the woods. We could chop till then, and this could mean that we have a few weeks before it's clean water and smooth sailing from here, right?
Yeah, for sure.
Oh, hold on, she has her hands in the air. Can we try? I can't do that. Can you move her to the stage?
Well, I was trying to, and then my Discord just totally froze.
Hold on.
That's fun.
I'm trying.
There we go. I got it.
She says she's on another call. She can't join, but
You're busy,
all right.
Chris.
Yeah. Anyways. All right. So nonetheless, that was close enough to what she mentioned. So expecting chop is something that we need to keep into mind. What chop does is sometimes it will create false expectations because we will have these crazy moves. I mean, if you think about picking or grabbing SPY calls this morning at the lows on that double bottom, and it can reach the 452. Well, you realize if you do the math and if you look at the chart after the fact, you realize that you could have made like 300, 400, 500% on the play, but it's also true that it could have gone the other direction, right? And so. And if you see that over the week, there was a possibility to take Facebook puts, you could have made, I think there's a member who made 1,300 something percent. He had one 300 put, I think, something like that. That paid off well. When you think of it, it looks really appealing and it looks easy and it looks like, oh man, this, if I had gone, if I had put $1,000 here and $1,000 there, it could have exploded to the upside. But it's also true on the downside. So what JTW is saying is smaller positions in this volatility it is a lot safer. Potential gain is higher, but the risk is higher as well, and that comes together usually. So when you play smaller, it will allow you to take profit maybe earlier because you're not looking to break the bank. You're just looking for success. And some people were posting $40 gains in the winning channel. This is great. I mean, you're looking at taking green when there is green, and then you move on with your day. You're okay with the entry and okay with the exit, and after the fact, you're never double, questioning yourself about I should have held longer. No, you just walk on with the rest of your day, and you're happy with it. So what I'm saying is JTW is absolutely right about trying to minimize the risk with smaller plays, even if potential is extremely high. You'll see possibilities where 500% plays can be done over a couple of days, even intraday, but that's not what you're aiming for. It's not a percentage contest. The idea is to slowly but surely, brick by brick, manage to stay afloat and build your account from that.
Yeah, 100%. I mean, just have a dollar profit goal for the day, keep that very conservative, hit it, move on to the next day. I mean, as we can see, the volatility is there to just do this day by day and not try to swing and get caught in positions that close one day, extremely green and then open up the next day bloody red. So, it's a very challenging market to swing stuff unless you're going leap status like Byron's doing.
Someone asked a question. I saw it through my screen and I couldn't answer it. Someone was asking a question regarding XOM. Sorry, I'm missing it. About dividend on XOM. Oh, sorry, here. I just got a put on XOM because they have to pay dividends next week. Wouldn't this trigger a pullback? So yes. I don't know if you're on podcast, but this makes sense. Usually, yes, they need to take their own money to pay the dividend, but usually once 007, are you still with us?
Yeah.
Yeah.
But
usually there's a way to calculate the amount that they will have to payout, and usually it really reflects it in the price of the ticker, doesn't it?
Yeah, I mean that's also priced into the option chain the week before too. So
Oh, okay.
like I mean like in terms of the premiums, it's already priced in to a certain extent. So even if it makes that move, it's already slightly priced in. It would need to make a larger move for it to really play out. However, if you were on the call side, it was good to. It's ideally better to close because um, it's still going to premium burn a lot, because this week's premium is priced in for the dividend. So next week when the dividend gets paid out, your calls are going to get weaker as well.
Yeah, I was holding calls for next week. However, I saw that even if the price was rising, the premium was decaying really quickly as we were approaching the end of the day. So I see exactly what you're saying. But usually, isn't there a way to calculate the amount of drop we could get on the ticker with the dividend when it gets paid?
Yeah, I mean, anytime a company pays dividend, is strictly takes it from the company's stock price, right? So
Right.
if you look at the dividend that they're about to pay, you can you just subtract that from the stock price. That's how much the stock price is going to drop on that day the dividend gets paid.
Right. And usually we see people jumping in. Well, obviously with market conditions being on your side, usually after that is paid, we see that dip gets bought, and it usually gets back pretty much to a pre-dividend level, doesn't it?
Yeah, I mean, it all depends on how much people like the earnings and how much they like the stocks. For XOM, it was a reasonable earning. They're doing share buyback, so there was that. But at the same time, it's been extremely hot, so it needed some opportunity to cool off too.
And didn't Biden say today that he was trying to lower energy prices and I think food prices as well? Didn't he mention that in his conference today? I think he did.
Yeah,
So that's going to affect the energy sector probably.
yeah.
Won't
I
it?
mean, Biden is very serious about inflation. Actually, he said that's a big concern, and he wants to attack it and stuff. So if he does, try his best to attack it, then oil is actually an inflationary trade on the positive side, right? Because oil is a commodity, so that's why the street likes oil so much because they know that if the value of the dollar is getting weaker, then the price of commodities would ideally go up from things like oil, lumber, and all that stuff.
Yeah, that's all because of us, right? Well, truly, I mean, this side of the border, if your dollar gets weaker, usually our dollar will increase compared to the value of the U.S. dollar, and obviously lumber is one of the commodities that we have, but oil prices, as soon as they start to rise, it gets good for the whatever they're digging off the bottom of the earth that they're what do you call that's this mud they're bringing. Anyways, it's very expensive to extract, but as soon as the oil prices are a little higher, it becomes profitable for them. So that will affect the obviously oil prices and the U.S. versus Canadian dollar. So basically, the U.S. dollar will go lower compared to the Canadian dollar due to that. So, all right. Plans for the weekend, 007?
Nothing much right now. It's been raining and snowing here. What about you
Omar?
guys?
Going to Enchanted Rock with my lady and her daughter. So gonna do some of that, some hiking on Sunday. Things will warm up a bit. We had a deep freeze this week in Texas.
Nice.
Oh, that's great.
Oh,
That's
you know what that means?
Trouble.
Yeah, that means Ted Cruz is heading for Cancun.
I think he's already there. I think
He's already there. He's like, shit, cold weather's coming.
he got ahead of it. Yeah.
And I wish I could say that. We got a deep freeze. Deep freeze at what? Just under 0, under 32. Is that it?
Mm-hmm. Yeah.
Oh, okay.
But here, nobody knows how to drive in ice. So like the whole city is shut down. You know, Austin shut down. My kid's school was canceled for 2 days just for 32 degrees and ice. So we were canceled for 2 days.
Love it.
We can't handle it.
Oh man, love it. All right, folks. It's been a very entertaining week. Thank you for sharing everything with us. I think we have a nice week coming up next week. It will be interesting to see how volatile it still gets. Feel free to ask questions. We are trying to implement a few things regarding the education side. I think KLQ was mentioning about the academy side. JTW and I have been asked to participate in that. I will say it again, what KLQ was mentioning. Feel free to ask things that you would like to hear, to learn more on. Let us know that, and we will try to find a way to share what we know and how we see things. It's always our main goal to share this with you. Okay, JTW, final word?
Sure. Yeah, final words, just enjoy the weekend. Take the time to relax. Don't get too hung up on where your positions might be over the weekend. You got to sort of disconnect every once in a while. I love the analogy that I was able to come up with off the cuff one day of, don't be that person that feels like if I'm not watching my football team, they're not going to perform well. They're out there playing the game one way or the other. That's the one thing I really, I think it just puts people in a tough spot when they're obsessing over their positions all the time. Because it causes that emotional reaction to anything good, bad, or indifferent to cause you to make decisions based on that and not what's on the chart. So, take this time to recuperate and decompress, and come back next week ready to hit the ground running.
Excellent, folks. Have a great weekend. People, thanks for coming in on this Friday afternoon. It's always nice to have you in. I know it's a little different approach on the Friday. We try to have a wider talk about many things. It's a little less about the what's going to happen for the day. It's a little bit of a recap, but thanks for coming in, and remember, send us questions, send us ideas about things you'd like us to talk about, and it'll be our pleasure to build on that. So folks, have a great weekend. Omar, thank you for stopping by. It's always a pleasure to have you with us. 007, your insights are always extremely appreciated, so thanks for that, brother. JTW, I'll share my meals with you over the weekend, so don't worry. I'll be on duty. And folks, I wish you a great weekend.
Have a great weekend, everybody. Enjoy it.
All right, take care, guys.
Thanks.
Thanks, 007. Thanks, Omar.
All right. This was a pretty good podcast. Today was an interesting day. Let's take a look at the market bubble real quick. Amazon was one of the biggest mover today. Clark's was the biggest mover to the downside. Take-Two Interactive. Wow, interesting. Almost fully recover here from that time when they make the announcement on the mergers and acquisition. Twitter looking pretty interesting. See what else is moving today. Banks are still doing pretty good. Bank of America was up. MasterCard coming back down. JP Morgan was up again today. So the financial sector has been doing pretty well. What a bull trap on SPY. Closed below 450. Could see more blood tomorrow. Indeed. I wouldn't say to a certain extent it was a bull trap. I mean, we talked a little bit about it in the video on Monday, right? And I think this is actually playing out pretty well. I don't know myself again though, but you guys can look at it if you want. I'll just pull up the charts here. The SGH shares should have already shown up. So let me pull up that chart that I talked about in Monday's video. So usually every Monday, I try to figure out where the market is going, and just to kind of help myself and give myself an idea of how I should make the play for the week and things like that. So if you look at it, things actually playing out pretty close, pretty well to a certain extent. We got the nice move up. So I mean, these arrows aren't always gonna be drawn like correctly in terms of the candle size, but it's just the directional move. So I was looking for a move up and then move down and then for the move up. So that's kind of what we got here. Financial getting like a slight, double bottom and moving up from there. And then we have SPY. Is this the right chart? Might not even be the right chart. Maybe it is. But SPY, come into that resistance right here, around that 456 area, and then rejecting from that, coming back down. So so that's that's going to be something interesting there as well. I think next week we could potentially come back to the double bottom. I was surfing through a bunch of charts before, and actually, Youngbo, they posted in the options watch list now, but you can also find it on the Twitter as well. So I think we could possibly get a rejection here. It's worth a lot of play. It's not like an all-in play here, but I think it's worth a lot of play. And then QQQs, I was looking for a rejection here, but we actually burst through it for a second because of the Google. of the Google split. So because of the Google split, we actually broke out. We actually had a fake out, and we broke out of that bearish trend that we had this whole time, right? So I was looking for the rejection around 362-ish, broke out, hit about 369s or 370s, and then now it's coming back down. So the next ideal move would be, coming back down here, maybe 340s, and then having another bounce from there. That's like best case scenario, but who knows? Who knows, man? Oh yeah, if you guys haven't had a chance yet, please check out the survey for a chance to win $50. Easy money. So that's Young Bull that's posting the link over there. I'm 007, so we're on the survey too. If we help you out, add value, please make sure to let them know. So let me tell you what I'm talking about. So looking at the sectors, right? Looking at these sectors, we're gonna look at some of the big stocks that kind of affect the index like that. So let's take a look at Microsoft. So looking at the daily chart on the Microsoft, you can see that Microsoft, kind of doing the same thing. We had a little move up, and then we're seeing a little rejection here. So we're coming back down a little bit there. It looks like ideally we could be coming to this range, and then we would set up a double bottom. That would be the ideal move. It would be very, very nice if we could get that move. I'm not saying that 100% certain we're getting that move, but we're always exploring possibilities and probabilities, right? So even something with Google, we're seeing similar thing. We're seeing possible reversal pattern as well, because we're getting this like a semi doji here, where we went from very bullish to getting a semi doji. So the candlestick pattern, I'm using Heikin-Yashi candlestick. And when you're using the Heikin-Yashi candlestick, you really need to only know three things. These hammers, bullish hammers, inverse hammers, and the doji. So usually when you see that, like let's say you see a strong move like this over here, right? Very strong move to the upside, and then you catch one of those dojis, it usually means there's a reversal move coming in. Now, nothing is ever guaranteed in the market, but that's usually what it means. Same thing with Netflix. We're seeing some weakness as well. The other thing that you got to be mindful of is that we're also hitting like the peak on the RSI side, right? So look at the fast MACD and RSI money flow that we have here. So the fast MACD and money flow here that we have here is showing that we're peaking. And if you look at like times when we have peak, it naturally cools off. It's just very, very natural. It happens all the time. We peaked and we're cooling off, so we just peaked again over here. So we could be potentially cooling off as well. So these are some very, very basic stuff. I think even Amazon's about to peak soon as well. So even Amazon, when they peak, they start to cool off a little bit. So all the big peaks eventually cooled off. Amazon hasn't hit that super peak yet, but it could potentially hit it soon. So Apple as well. And we saw our Apple's RSI getting hot yesterday too. We talked a little bit about that yesterday. I think around like 225. But it could also potentially find support in the half-day chart. Hey, what's up, Aubrey Nickel? How you doing, man? We haven't really checked out the earnings for today yet. I will check them out soon. Just look at the market and talking about the RSI and things like that. How like a lot of stuff on the daily are getting ready to cool off. All right, let's check out some earnings. I don't see the Brookfield one here. Oh, that was this morning. I blame myself. Where is that? Oh. Do you know the ticker? Was it B? Oh, there we go. Brookfield Renewables, right? Are you invested in this? It's a BEP that we reported today. They said they announced the record results, 5% distribution increase. Looks good. Said 2021 was a good year for them. Year ended. Huh? Lost some money here. 934 million, $1.40. 10% increase from the prior year. If there wasn't inflation and stuff, it would have been a 17% increase, they said. More capital expenditure, 4.3 billion, which is not always good. It's actually on the balance sheet, it's pretty bad. But long term, it could be good. Because that could contribute to growth. It really depends on how you want to look at it. But it's bad, on like free cash flow and stuff. Record level of development. Just repeating some stuff they said earlier. Revenue did see some increase in the income statement, but net income is still higher. How's it trading from a 1 year basis? 1 year basis is pretty low from last year's price. 2 years is reasonable, coming to pretty close to the same price to the March levels. Tangible book per share is $10. Yeah, I mean, these things are interesting. Take a look at some of the other earnings that I want to go through. Actually, I want to take a look at Royal Caribbean. I want to see how these bozos did. Where is Royal Caribbean? Very nice, very nice. Where'd you get it at? Of course, man, I got you. They still said 2022 being a strong transitional year. Hehe. They said Omicron created short-term operational challenges that have unfortunately weighed on close-in bookings. While the timing of the Omicron was particularly unfortunate for the first half of 2022 bookings, it will likely delay our return to profitability by a few months. We do not expect it to impact our overall recovery trajectory and the strong demand for cruising. Die! I remember when they said that 2020 year was going to be a profitable year for them. Yeah, okay. Yeah, okay, buddy. Yeah, actually, I don't even know why I'm hating on them so bad. I actually like their cruise ships. I've been on them before. I probably won't go anymore, but I actually did like them. Due to the impact of Omicron variant, the company experienced some service disruptions and canceled several sailings in Q1, although it still expects to operate approximately 95% of its planned capacity in Q1. I think they're gonna get sued soon, man, because they're doing a lot of over-promising here, and I don't think they're gonna meet these over-promise. The group expect to return the full fleet before summer season of 2022. And they think the load factor is gonna approach historical levels in 2022. Oh my gosh. They're pretty much saying that everybody and their mother is about to jump on a cruise ship, man. I feel like doing a survey. Like, would people go to airport destinations or would they go on cruise destinations at this point? So this was their fourth quarter result. They reported the yearly result for 2021. So this year, the company lost $5.3 billion. Oh, Jesus. Oh, they might be in trouble soon. So it says December 31st, the companies, so they lost 5.3 billion for 2021, right? Which means they're not gonna have a lot of money left over. So they say over here they lost $5.3 billion, as in blowing through $5.3 billion. The company's liquidity is only at 3.5 as opposed to as at the close of December 31st. They have opportunity to pick up another 0.7, and then if things don't turn around, pretty much, if things don't turn around soon, they might have to go bankrupt by 2023. Oh, fuel expenses probably gonna wreck them too, because fuel expenses are also going all-time high. They gotta keep these ships afloat, and fuel prices haven't been going down either. Oh, this is not good for them. It's over. Let me catch up on comments. Kogi, what's up? Check Disney. Ah, man. Yo, you know, when the market was bullish, right? When the market was bullish, I wanted GGPI to like hit. I think GGPI could hit $20. But now that the market is in very bearish territory and people are not like they're not you know, they don't have a higher exposure to risk assets and stuff like that, I think we're gonna be in trouble, man. I don't know if we can get that $20 run that we had previously. So I mean, we're looking at Disney levels. Estimate is 73 cents, $20 billion. Compared to last year, they were pulling about 16 billion, 32 cents. So they're expecting this quarter to be better than last quarter, in terms of revenue for sure, and you know, estimate is pretty strong as well compared to the last quarter. but they did miss the quarter before. So compared to the quarter before, they've been seeing a decline. That's why the previous quarter they dropped a lot as well. I think if you're gonna play a lotto on Disney, might as well play both sides, man. You know, you can easily buy a put for 120 and then just buy a call for like 150s and just see which side plays out at this point. I mean, the market has been so volatile that you could literally make money playing both sides now, on even naked positions. Ouch. SCNS? I got you, Hazard. What's going on, man? How you doing? Whoa! Yo, didn't you bring this up last week? Was that you? It's moving up pretty strong, hitting a little resistance here. So it's coming into our MOB line, right? Over here, 316. And this is an area that we have, you know, struggled at before. So sometimes when it comes to the MOB line, if it can't break above it, it's gonna break under. So I hope that helps, Hazard. Nasty May says, I haven't been, but never understood the appeal of cruise ships. You want me to sell you? I could sell you if you want. Say the word. Say the word. Actually, I think you said you already have you have a wife or you're like married or something already, right? But the appeal of cruise ships is actually pretty interesting. I mean, if you're in a new relationship, you're like dating somebody or you met a new girl, right? Cruise ships are actually pretty interesting vacation because it's like a hotel on seas. You know, you pretty much have an exclusive hotel on seas, and then you have so much activities. You can go to like dinner. You know, oh, you're single as fuck. You definitely this would be appealing to you then, you know. So like if you meet a girl, right, and you wanna and you go and study with her for a little bit, and you want to take things to the next level, you could ask her, and you're like, hey, you know, you want to go on this cruise with me, you know, take her on the 7-day vacation or 5-day vacation, trap her, yo, in this hotel room with you. And then, you know, I'm just kidding though half the time, but you know, you guys can have some very intimate moments when you're on the cruise and you're like spending that much time together. And then on top of that, there's a lot of dinner dates. Like they usually, if depending which cruise line you go to, if you go to the Royal Caribbean, there's a lot of free dinner dates that you can book to like really nice restaurants, so you can try out multiple cuisines like on different days. And then there's also a lot of shows and a lot of things like entertainment that you can do as well. So it's pretty like it's pretty good if you're like lazy, you don't want to like plan things out too much, and you want to have like a nice summer fling at the same time, you know. And it's especially appealing if you just want to get away from like your family, your friends, and things like that, and don't have anybody cock block you. This is like a really good way to do it. It's a really good way to get personal level. But it's also, but you'll also definitely see like you'll see mix of people. You either see like people in like 30s or late 20s or mid 20s, or you'll see people that are like 60 plus. But it's cool though. Like there are good experiences there. Just don't go to the buffet 24/7. That's why a lot of people get caught like doing it on the cruise, and you'll get wrecked. But if you guys do ever end up going on the cruise, I'll tell you this key trick, okay, that you gotta do. This number one key thing that you must do if you ever go on the cruise. This is major key. So once you get on the ship, you're gonna head to your room, and then like an hour or whatever later, they're gonna let you out. So the second they let you guys out, you go to the customer service area. They're gonna have kiosks and computers and things like that. You go straight to that area, and the line might already be looking ridiculous with like 20 people online, but it's okay. You stay on that line, homie. You stay on that line and you wait on that line, and you book everything that you want to do throughout that whole week. You book it right then and there on your first hour on that ship. Because if you don't book it then and there, you're gonna miss a lot of the cool activities. Like there could be like wave surfing, whatever, like all these other random activities, and like there could be like good restaurants, like premium restaurants that you can book for free. If you don't book it on the first day, you're not gonna get it. So that's something I learned. I remember like the first time I got on there, I was like, "What's this line for?" And I was like asking my girl at that time, and then some boomer man told me, he was like, "You gotta get on this line, son. you gotta jump on this line, son. You know, you need to book your cruises and everything." It's like teaching me these things. Yeah, pretty much, G-man. Pretty much. Oh. What's up, Uno? Thanks for subbing, man. Appreciate you. Sorry, our Twitch thing isn't working that well. We also have some people that follow. Kogi, Master Potato 69, J Manager, welcome. My parents always wanted to be on the cruise. I'll let them know. Yeah, let them know. First hour, must do those key things. Yo, G-Man, thanks for subbing, bro. I appreciate that. Thank you for subbing and supporting our community here. 2018 spy chart looks horrible. Every day I'm still scared for the trap. Either bulls or bear. I guess 420 is not the bottom, maybe 400. If we're looking at 2018s, right, there's two variations. The first variation is this one over here, where in the beginning of 2018 they started the interest rate increase, and we had that major drop like we had last week. That kind of defined the bottom a little bit. So pretty much the biggest drop that we had the week before would ideally define the bottom, which is over here, right, 420s. So this is scenario number one, and then we would grind back up and come back down again a little bit, and then grind back up again, and then coming back down some more, but still need that 420 level to hold and define the bottom. And just a lot of, you know, more grind and chop back and forth. It's a lot of traps across the board. That's scenario number one. Scenario number two is this one over here, where we had a dead cat bounce, coming back to the yellow line, this is actually where we're at right now. We drop below our MOB moving average, where we come back to back test the MOB line, break down again for the double bottom, and then back test the MOB line again, and failing a third time, and then just completely flood it. So that's the worst case scenario. So this is the ideal case. This is the worst case. I think there's a doomsday case as well. So as you can see here, when I posted the video and discussed why I thought we could potentially pull back this week, it was because we were dropping. We had a strong move. We had the three strong candle move up there, and then we kind of tested the MOB line. It looked like we wanted to break above the MOB line. MOB is our make or break line, our mob line. This is where the bears or the bulls as a mob would come in and either smack it down or take it through, you know. So that's the ideology behind that when I talk about the MOB line for the algo. So when we came back up here, you know, a lot of people thought we were going to pass it, but as you can see, we end up, you know, having a dramatic pullback under. And the worst part about this pullback is that it not only, you know, missed the NOB line and pulling back, it also couldn't hold above the support over here, right? Which is the 450 area. So we also did not close above the 450 area for this week. So if you guys, you know, I discussed how last week, how this Monday I was bullish because of the way we closed on the market. I discussed on Monday that the reason I was bullish was because of the way that the market closed on Friday, the 28th. So when market closed on Friday, let me switch over to regular candle real quick, so we can see the actual close. So this is the close on the 28th, right? This close was actually at 441.95, which is above the close on the 21st, which is above the low on the 21st, right? So that's why I was bullish, because this was higher than this. So I thought we were pretty good. But as you can see, like this close over here, we're below this really, really ideal area that we need to get above, where we broke above before. So, you know, we talked about the back test analogy yesterday a little bit, and, you know, moving up here, we're supposed to back test this area, but since we gap below the support line for back test, right? And now we're just being stuck below. Instead of, you know, breaking through it, we're just getting bam, 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 you know, like glass ceiling and smacking on it. So the ideal situation in these cases, like just keep in mind, a lot of things I'm not saying 100% is going to happen. You know, I'm not taking 1,000 bits to the downside, but I am hedged to the downside as of yesterday. You know, I did take short positions to the downside. So the ideal situation from this technical analysis would be the rejection here, which would mean that, you know, we're going down like this. That's the ideal situation. Now, this situation could get invalidated as well if we break above 456. So, you know, it all depends on how things play out. Yeah, a lot of it is pretty, you know, binary, almost like computer in a way. where, you know, if it's above certain level, it's bullish. If it's, you know, as long as we remain under 450, we're bearish. That's the key. That's the key here, honestly. What's up, Fiat World? How you doing, man? Let's check out GGPI. So GGPI MOB line is around $11. Our MOB line is just a major moving average where a lot of the times the stock would go to, and it could, you know, it would either be an ideal support or resistance. So if the stock is under it, then, you know, it's a resistance, right? If it's above it, then it would be support. So like kind of like over here, you know, bouncing off this MOBs and things like that. So we actually broke under it, which is kind of ugly. But that's also because the market has been extremely bearish, so a lot of people end up selling it. It's like I would say think of MOB line as like the medium price for something that you would buy all the time. That's what MOB line is. So like maybe this might be a bad analogy, I'm not sure, but I don't know, what do you guys buy all the time? What's a common item that you guys like buy, whether it's fruits or lunches? I guess let's say like let's say like burgers, right? Milk? Okay. So let's say the MOB line is the medium average price of milk, right? I don't know, how much is milk a gallon? Like $3.99 a gallon? I don't really look at prices anymore, but let's say it was $3.99 a gallon, right? $3.99 would be the medium price that has been selling all year. That's the MOB line over here, right, on milk. So if it's above $3.99, then you would say, oh, you know what, it's kind of expensive, I don't want to pay for it, you know, so I'm not gonna get this specific milk right now. So that's why it could be rejection, because if it comes back to this area and gets above it a little bit, you know, people might not want to sell it too much. Or people might start taking profit, you know, as it gets to that medium average. But if I was like, well, actually, let's say if I was stockpiling milk, right? If I was stockpiling milk at this low price here at $10, and it gets back to $11, this is probably an ideal area where I would want to unload, because I know that this was a medium range of price previously over here. So if I was stockpiling and it gets back to this medium range of price over here, this is probably where I want to unload. And then, like, you know, if I wasn't stockpiling, if I was opposite, it was if I like would usually buy milk a lot, and I see it go from like, you know, $16 to back to like $11, then I know that, you know, if the price was usually pretty high here, but the median price over the last few months started to move up to $11, then I would ideally want to buy it over here, because, you know, I know that this is a reasonable, cheap, medium price right now, and the previous price over here was much higher. So I will want to take advantage of that and buy at this range here, so that it would be demand coming in. However, sometimes, you know, an item can go below it, and you would either, you know, if you're a supplier, a distributor, and you're holding on to item, you might either, if it breaks below the median price, then you'd be like, oh snap, I might need to, you know, liquidate my inventory before the market falls down further. So so that's why sometimes when the moving average gets broken, it falls down even further, because people are scared and they want to liquidate their product. And vice versa, if things go up, people might want to reload the inventory, because they're like, oh no, you know, looks like the trend on the milk is coming back, let me load up on milk, because everybody want to drink milk now some more, so I might be able to sell that at a higher price later on. So that's kind of like a little bit things in terms of business, in the sense of like supply and demand, and the MOB lines and the moving averages like that. So treat the MOB line as if you're doing math and you're just looking at the median price or the mean price. I hope that helps, man. Sure. Anytime, man. I got you guys. Is there any charts that you guys wanted to check out or any other earnings or anything? Bistro Myers. Oh, CBOE. Let me check this out. CBOE isn't pulling up. So they have pretty good earnings. 40% increase, 40 quarter over quarter. 27% increase in sales compared to last year. Company was trading at $90-something. Actually pretty cheap compared to the 2-year basis a little bit here. So CBOE is the Chicago Board Options Exchange. You know, it's still the largest U.S. option exchange by total volume. It's pretty much the market. Pretty interesting investment. XLV. Let's take a look. XLV is healthcare. We saw a lot of healthcare earnings this week, and it's been iffy. It's been iffy. You know, I liked this sector previously the week before. I said that was a good buy the dip sector. I really liked it. But we're also struggling, and we're coming back to the MOB line. We're also coming back to that trend line, that similar trend line that we have on SPY, and we're not able to break above it. So it looks like it wants to reject. We did look through a lot of earnings from MRK. I mean, I personally looked through a lot of earnings from MRK, and like DGX and UNH and all these other healthcare companies, and they are also struggling with supply chain and inflationary issues as well, which I was a little surprised of. I didn't really think they would have that much issue in that sense. So that could possibly set up. If that happens, we might have a head and shoulder pattern setting up here, right? And usually head and shoulder patterns, it needs to hold this 124 area. If it doesn't, it could potentially flood to the next level, and you don't want to catch that next level. So it's definitely an area to risk off. Hey, what's up, Storm Branson from the YouTube side? Snapchat, let's take a look. Does Snapchat rally into next week? That's a great question. So Snapchat had a pretty interesting earnings. I think, you know, we're heading a little bit into resistance today on the MOB line, on the half-day chart, but we're also heading into a technical line resistance over here as well at that $38 range. What do we close at? We closed at 38.90s, right? So we failed to really break above this line as well. because this line is somewhere around 39.35, give or take, and failing to break above it would mean that we would pull back a little bit more. I think this $34 range could be interesting. That's where we pull back to pre-market as well. So same move that I kind of thought that happened pre-market, I think it could happen here. It was also a little crazy too because we saw a lot of volume, a lot of power coming in, and that could set up a reversal on the weekly side, which means we could rally a little bit further, but it needs to get above this $39 range before we can go to the next level. So it does have some major levels. Next level is 43. Above that, we could even hit like 53s. So there are definitely some big levels, but in order for it to run that much, I think the market would also have to be extremely bullish, and we would need that momentum to carry. So, if you think the market is really bullish next week, it could happen. If market continues to downtrend like we think it could possibly happen, then it's probably going to get a little rejection, but we'll see. They are one of the few social media companies that actually made more money this year than last year's, as opposed to Facebook where they were struggling. So I think that's an interesting perspective on it as well. So I hope that helps, man. Toss up on the weekly earning page when you get a chance. There was something I wanted from earlier this week. Sure. I know you asked me about AGNC earlier this week. Had some interesting stuff. Starbucks, Match Group, MicroStrategy, Qualcomm, maybe, or Lightspeed. Waste Management. Oh, one of my other favorite companies. I don't really talk about it because it's such a boomer company. It's waste management, right? People are always gonna collect garbage and stuff like that. But I think this is gonna be a very interesting company. If we can come back to this level over here, it's definitely worth an area to take position, because this was something I did a lot of research on back in 2020, and this is a very solid company. And I don't think that this will ever go out of business, because garbage is the future, man. Garbage is the future. We just can't get rid of garbage. There's just so much garbage. But it has, for a boomer company, it also doesn't make a lot of money. So it really gotten away from the valuation for a bit there. So I would love to see it come back to the mean average here. Can you check out Win and Bill, please? I can check out one or the other. Let's check out Win. So Win Resorts Limited is like, I think, casinos and hotels. It's part of that consumer discretionary sector. And this whole sector has been iffy between Royal Caribbean, cruises, and things like that. The sector has been pretty weak. They haven't really been able to turn the profitability and make money. They're reporting earnings next week on February 10th. They're still below their 2020 prices, and reasonably so. Because they haven't been able to turn profitability for a while there. Oh yeah, no, they still haven't. All negative. So earnings per share is usually profitability margins and things like that, and they've been struggling, man. They've been struggling for a long time. They were profitable back in 2019. They were struggling to be profitable late 2019, and then early 2020 they got hit. They lost their profitability just before then. And then the whole COVID situation happened, and things hasn't been good to them. So I think this is actually a company that can go down even further. But we'll see. Market hasn't really found the valuation for this yet. On the technical wise, we do have a little bit of squeeze here. We are pinching a little bit here. So usually what this means, we're either going to go from, bigly in one direction or the other. I think we're going to pinch to the downside. But sometimes these shorts, they take forever to play out though. So unless you're playing like shares, it's extremely, extremely hard. Unless they're getting bought out by somebody though. That could be something that can move them to the upside as well. So I hope that helps, man. I see that you don't really have a lot of support resistance lines in your chart. Sometimes a lot clouds my judgment. Oh yeah. That used to happen to me a lot when I first started trading and I started charting a lot. Well, actually not when I first started trading, but just when I first started charting. When you first started charting, you're charting everything from 10-minute charts, 5-minute charts, 48-minute charts, or daily charts and so on, right? You're charting all over the place and you're like drawing lines everywhere and things like that. And things can get really, really ugly. So if you actually look at my I don't really show my TOS chart, but if you actually look at, ever had a chance to look at my Thinkorswim chart, it used to be really messy on some tickers. Like on Tesla, I would have thousands of lines all over the place. But now I tried to keep it a little bit more clean. And I strictly just try to use moving averages a little bit more, because a lot of the times the lines, they get very busy and it clouds you from like really seeing the movement. But that's why a lot of people also like using Fibonacci retracement lines as well, because they'll just consider those as automatic lines being drawn for them instead. But if you want to keep it clean, I would say try to chart only on the daily chart or the half-day chart, and look for like bigger trends, like weekly trends, daily trends, or half-day trends. So this way, you're not having to draw too many lines and you're only reacting to major levels. So which is what I'm trying to do here. So like this line was drawn on the daily chart, right? And you can see how how things are still reacting to it to a certain extent here and there. But I would just go further out on time to keep the charts minimalistic, and then switch to using moving averages as resistance instead of trying to draw a support and resistance line as a true resistance, because a lot of times stocks actually move on moving averages as opposed to support and resistance. But moving averages are a change in time frame, so it could be on 1 hour, 5 hour, or 8 hour. All those moving averages are going to have different support and resistance and different time frames. But that's pretty much it for today, man. Ran the stream a little bit longer than expected. I hope that was helpful. I think we're going to end it here, and we'll probably be back on Monday. I might do another session on finding value stocks or something this weekend or not, if I have time, just to give a little bit idea of how to look for like fundamental analysis, understanding price to earning ratios and things like that. Like that's what I mean by finding value, like price of price to earnings, price to sales, peg ratios for the growth, and then just general debt to equity and things like that as well. So I was thinking about making a video on that to kind of give you an idea how to look at fundamentals. So this way, people don't get too crazy buying like, ridiculous stocks that are like all over the place. But that's usually only good for long-term investing though. That's it, guys. Thank you for stopping by and hanging out with us, and have a good night. Oh yeah, don't forget to check out the survey.